Welcome back, everyone. What you read in the title is exactly what is happening. Beginning next month, 5 very real shifts are going to impact the wallets of Canadian seniors. And the truth is, you probably won't get a heads up in the mail, a friendly phone call, or an official letter about most of them. Service Canada isn't going to show up on your porch. The CRA isn't going to ring your phone to give you a warning. These adjustments are taking effect whether you are prepared or not. The part that should genuinely concern you is that 3 out of these 5 updates could either drain your bank account or put extra cash in your hands. It all comes down to one single factor: finding out about them before it is too late. Those who get the information before the deadlines pass get to hold on to their cash. Those who find out too late end up sending me emails saying, "I really wish I had known about this earlier." I absolutely do not want you to be in that second group. So, stick around. If you are 65 or older, or if you look after someone who is, this is going to affect you in actual everyday dollars and cents. I will guide you through all 5 of these slowly and clearly. I will explain exactly which ones could take your money, which ones can keep your funds secure, and then I will hand you the exact steps, the phone numbers, the paperwork, and the phrases to use so you end up on top. We aren't talking about confusing news articles here. We are talking about your monthly deposits. Let me be completely upfront about what is on the line. We are looking at your old age security, your guaranteed income supplement, your CPP, your tax returns, and that quiet clawback that slowly chips away at your funds every month without you even noticing. For a lot of people watching, the gap between understanding this and ignoring it means losing anywhere from $300 to well over $1,000 a year. When you live on a fixed income, that isn't just spare change. That is your grocery run. That is paying to heat your home in the dead of winter. It is the gap between a stressful, tight month and a calm, comfortable one. And the truly heartbreaking part is that the majority of folks lose this cash completely in silence. It doesn't happen in one big crash. It slowly drains away, month by month over the years, all because no one told them where to look. This is exactly why I need you to hit subscribe before we move forward. I am not saying that just to get my numbers up. These government rules do not just shift once and stay put. They change 4 times a year. Your OAS gets updated. The clawback limits go up. The GIS guidelines adjust every single July. Tax deadlines arrive and pass by. The folks who are subscribed here learn about these updates early enough to actually do something about them. Those who aren't subscribed usually hear the news long after the deadline has come and gone, leaving them no choice but to accept the financial hit. So click subscribe and hit that notification bell next to it. When the next update rolls out, you won't be the last person to hear about it. You will be the first. All right, let's dive in. Just a quick note before we start. There are far more hidden rules, tax credits, and benefits than I could possibly squeeze into one video. These are the details Service Canada rarely explains clearly. Now, here is the harsh truth that catches people off guard until it is already costing them. Our retirement system in Canada runs on something known as self-application. Simply put, the government is not going to track you down to hand you a check. However, they will absolutely track you down to take their money back. If there is a benefit waiting for you, you have to raise your hand and ask for it. No one is going to mail it to your house automatically just because you are eligible. That single detail is the main reason why seniors miss out on so much money in this country. Let me paint the clearest picture I can. The Guaranteed Income Supplement, the GIS, is extra support meant for lower-income seniors, added directly to their old age security. Right now, across Canada, there are seniors who are perfectly eligible for hundreds of extra dollars every month, but they aren't getting a single dime. Why does this happen? Either they never put in an application, or they stopped doing their taxes, so the government just cut off the payments. The cash didn't vanish because they weren't entitled to it. It vanished because the rules demand that you prove your eligibility every single year, and nobody bothered to explain that to them. They figured that once they got approved the first time, the checks would just arrive forever. It simply does not work like that. This is the assumption that ruins people's finances. Deep down, most of us think, if the government owes me something, they will obviously tell me. That is completely false, and trusting that idea is going to cost you. Both the CRA and Service Canada are usually running on information that is up to 2 years old. They review your past tax returns to figure out what you deserve today. So, if your earnings went down, if you lost a spouse, if you fully retired, or if your investments dropped, the government has no clue yet. They are still paying you based on the person you were 2 years ago, making the money you made back then. That delay between your actual life right now and what their computers say is exactly where seniors get shortchanged or miss out on payments. So, as I walk you through these 5 updates, keep one vital thought in your head at all times. None of these helpful benefits will come hunting for you, but the clawback will find you instantly. The system is incredibly efficient at taking its share, but when it comes to the money you rightfully deserve, you have to go out and grab it. Keep that in mind. Let's begin with the first change. I will use a theoretical example so we aren't just talking about invisible numbers. We will call him Tom. Tom is 71 years old. He is responsible, he stays out of trouble, and he has been getting his OAS and a little CPP for years without stressing over it. Last year, Tom wanted to help his daughter buy a house, so he pulled a much larger chunk of money than normal out of his RRSP. Let's imagine it drove his total income way up just for that one specific year. Tom didn't worry about it. It was his own savings, and he needed to use it. But in the eyes of the tax agency, that big withdrawal was treated as regular income, and it silently pushed Tom right past the OAS clawback limit for that year. The result? Beginning the very next July, the government started clawing back 15 cents out of every single dollar of his OAS that sat above that limit. Cash just started evaporating from his monthly payment based on a one-time withdrawal he had already spent. Tom was never given a heads up. He just saw that his old age security check was lighter and had no idea why. Tom is not a careless guy. He just had no idea that taking out a big lump sum in a single year would activate the clawback. If he had known, he could have timed it differently or split that withdrawal over 2 different years to ease the impact. By the time this video is over, you will know exactly how to dodge the trap Tom fell into. Remember his story as we unpack change number 1. We are going to take these 5 changes slow. Try to see where you might fit into each one. Change 1. The OAS clawback limit and how it secretly traps more retirees every single year. Attached to your old age security is a rule officially named the OAS recovery tax. Almost everybody just refers to it as the clawback. Here is exactly how it functions. If your net income for the year crosses a specific boundary, the government starts stripping away portions of your OAS. They take 15 cents for every dollar you bring in over that mark. For the income year that dictates your check starting next month, that boundary is sitting at roughly $93,454. The second your net income goes over that number, the clawback kicks in, and it only grows from there. By the time your income pushes past $150,000, or slightly more if you are 75 or older, your entire OAS payment can be reduced to 0. Completely wiped out. Why is this so crucial right now? Because countless seniors accidentally trip over that line without even knowing it. You pull a big chunk of money from an RRSP, just like Tom. You sell a piece of real estate, and the capital gains spike your income for that year. Your minimum RRIF withdrawal gets automatically larger as you get older, regardless of whether you want the extra cash or not. All of a sudden, you are over the limit, losing 15 cents on every dollar of your OAS, and nobody sent you a warning letter. On a full OAS benefit, that clawback can quietly erase several $100s from your wallet every year. Stretch that over a decade of retirement, and you have unknowingly handed thousands of dollars right back to the system. The exact step you need to take, and I will break it down fully later, is to closely monitor what your taxable income is going to be before the year wraps up. Because the second the clock strikes midnight on December 31st, your tax year closes, and that clawback is set in stone. You cannot reverse it after the fact. Change 2. The GIS recalculation trap for anyone missing a tax return. I briefly mentioned this earlier, but starting next month, this becomes incredibly urgent because July is the exact month this reset happens. Your GIS payment is recalculated every single July using the income you reported on your latest tax return. If you have not filed those taxes, the government has no numbers to work with, so they will either shrink your GIS or stop it completely until you finally file. Let me attach real dollars to this so you understand the weight of it. The top GIS payout for a single senior is more than $1,000 a month. That is over $13,000 a year, entirely tax-free. If your payments get frozen just because of some missing paperwork, that is not a minor bump in the road. That is potentially $1,000 vanishing from your budget every month until you sort out the forms. And here is the harshest reality. They will not pick up the phone to warn you. They won't say, "Hey, you forgot to send in your return. We have to pause your supplement." The money just gets smaller or stops arriving, leaving you sitting at the kitchen table trying to guess why your bank account is short. The solution is straightforward, and it is the absolute most vital piece of advice in this video. File your taxes every single year, even if your income is a flat zero. I am going to repeat that because folks always ignore it. Even if you earned absolutely nothing all year long, and even if you do not owe a single dime, you must file that return. Filing is the only way the government knows you still qualify for the help. If there is no return, there is no GIS. It is truly that blunt. Change 3. Your CPP and OAS update with inflation, but the bump is smaller than you have been promised. It sounds wonderful in theory that your CPP and OAS are indexed to inflation. But here is the reality most folks miss, and I want you to hear it directly from me so you aren't let down when checking your bank balance. The adjustment is calculated using the Consumer Price Index over a specific set of previous months, not the soaring prices you are currently dealing with at the grocery store or the pharmacy today. Because of this, the extra money you see deposited might only cover a fraction of how much your actual living expenses have climbed. Practically speaking, this means your check might increase by 1% or 2%, but if your rent, your medications, and your groceries jumped much higher than that, your actual purchasing power went down compared to last year, even with the raise. I don't say this to bring you down. I bring this up so you can plan with your eyes open. The solution here isn't a piece of paper to sign. It is simply awareness. Do not build your budget assuming your government benefits are perfectly tracking your real-world costs, because they usually aren't. Plan your finances with that shortfall in mind. Change 4. Stricter digital and phone security at Service Canada and the CRA and the fraudsters using it as a disguise. This is something that is legitimately shifting right now. Both the CRA and Service Canada are ramping up how they verify your identity. More tasks are moving to the internet. More systems demand a verified My Service Canada account or a CRA My account, and they are pushing multi-factor authentication. That is the security code sent to your cell phone when you try to sign in. For many retirees, this technology is a massive hurdle all on its own, but the truly dangerous part is that it has created the ideal smokescreen for scammers. This is where the danger becomes real, and I will break it down thoroughly in a second. The quick summary: criminals are dialing up seniors, posing as CRA or Service Canada agents, and insisting there is an urgent issue with your account that must be verified immediately. They weaponize the fact that the actual security rules are getting stricter to make their fake stories sound convincing. But the legitimate CRA never operates like that. Understanding the actual protocols is your strongest shield against the fake ones, and I will hand you the exact rules to memorize in the upcoming action steps. Change 5. Senior tax credits are adjusting, and you might be leaving actual cash on your tax return. There are specific tax write-offs designed solely for retirees. the age amount, the pension income amount, and the medical expense tax credit. Each year, the thresholds for these adjust, and each year, thousands of seniors either ignore them completely or file them incorrectly, silently overpaying their taxes. The medical expense claim is the massive one that slips past people. Prescription drugs, dental procedures, hearing devices, eyeglasses, specific in-home care costs, and even travel expenses for medical appointments. These can pile up into a highly valuable credit on your tax return, but you are required to keep track of them and submit the claim. The CRA is not going to magically apply them for you out of the goodness of their hearts. On an average senior's tax return, claiming these properly can mean the difference between several $100s remaining in your checking account instead of going to the government. Ignore them, and that cash is simply abandoned. So this is one situation where keeping some basic records throughout the year pays you directly when tax season arrives. Now those are the 5 major shifts. Before I explain the fallout of ignoring them, let's ground a few of these in reality with some quick hypothetical stories. Because a number you can visualize is a number you will remember. Imagine a lady named Edith, 74 years old, surviving on a tight budget. Edith is fully eligible for the GIS, but a few years back, she just stopped filing her tax returns. Her logic was, I barely make any money. What is the point? So, every July, when the government computers try to recalculate her GIS, they hit a wall, find no recent tax data, and quietly keep her supplement reduced. Edith has been scraping by on far less than she rightfully deserves, month after month, entirely because of one unfiled document. The day she finally submits her taxes, perhaps with a free community clinic's help, her GIS can be recalculated, and within an 11-month window, partially backpaid. One single form, hundreds of dollars a month. That is change too in the real world. Now think about a man named Harold, who is 68. He keeps his life incredibly organized, except when it comes to his medical receipts. Throughout the year, Harold spends serious cash on prescription pills, a new pair of glasses, a dental crown, and a few long road trips to see a specialist in the city. He tosses all the receipts, so when tax time rolls around, he claims absolutely nothing. Meanwhile, his neighbor, who is the exact same age with identical health costs, tosses every receipt into an envelope, claims the medical expense credit, and gets several $100s back. Same out-of-pocket spending, completely different financial results, dictated solely by whether someone decided to keep the paper. That is change 5 in action. And recall our earlier friend Tom, the man whose massive RRSP withdrawal threw him right past the clawback line. If Tom had just known, he could have spread that cash pull over 2 separate calendar years or adjusted his timing, allowing him to keep much more of his OAS. He didn't know, so the clawback found him automatically. That is change 1 in real life. 3 normal, responsible folks. The difference between the version where they keep their hard-earned cash and the version where they lose it always boils down to one detail. Someone knew to look. Now let me tell you clearly what occurs when no one looks, because that is where the true financial damage is dealt. I want to slow way down here because this is the exact spot where folks get hurt. Every single one of those 5 changes comes with a strict deadline, a specific time frame, or a permanent penalty attached, and the system is not going to warn you before that penalty locks into place. Think about the clawback first. Once the tax year closes on December 31st, your income history for that year is final. If you failed to manage it, if you pulled that massive RRSP lump sum in the wrong year and drove your income over the limit just like Tom did, the clawback math is done. You cannot rewind the clock and undo it. That money is permanently lost for that particular year. The opportunity to adjust anything shuts silently at midnight on New Year's Eve. And let's be honest, almost nobody is stressing over their OAS clawback while they are ringing in the new year. Next, consider the GIS. If your monthly deposit gets suspended because you skipped filing, you do not always get all that missed money back automatically, and even when you do, there is a hard limit. Retroactive GIS payments generally only reach back about 11 months. So, depending on how long you let it slide, you could permanently lose months of a supplement that you fully entitled to. Picture that. $1,000 a month that was yours, that you needed, just sitting there unpaid, gone for good just because a form wasn't submitted. Nobody at Service Canada is going to chase you down to ensure you got it. The error just lingers there silently, month after month after month. And look at the scams linked to Change 4, because this one is not just theoretical. The Canadian Anti-Fraud Centre is actively broadcasting warnings about this exact pattern. Criminals impersonating Service Canada and the CRA are targeting seniors specifically because older folks are the most likely to treat a formal-sounding phone call seriously and want to do the right thing. The split second you hand over your social insurance number or your banking details over a call, that information is out there permanently. You can't pull it back. This isn't me being dramatic for views. It is a documented act of danger that the country's official fraud agency is warning us about right now. So, grasp this clearly and let it sink in. The cost of doing nothing is not zero. It is the clawback you didn't prepare for, the GIS you failed to claim, the tax deduction you ignored, and in the absolute worst case scenario, the savings a scammer walked away with because you weren't aware of the actual rules. Inaction has a massive price tag, and for a lot of seniors, it is a steep one. So, let me show you step by step exactly how to avoid paying it. Before I give you those steps, let's dismantle a few common myths I hear constantly, because every single one of them is silently draining your wallet. Myth 1. My income is too low to worry about taxes. This is by far the most costly mistake you can make. For a lower income senior, filing your return isn't about what you owe the government. It is the exact key that unlocks your GIS and your senior credits. Having a low income is the absolute reason you must file, not a reason to skip it. Myth 2. If I were eligible for a benefit, they would have notified me by now. They won't. The system simply pays out what matches the data on your profile. It does not review your life to spot missing opportunities. That phone call offering you unclaimed money is never going to happen. It is entirely up to you to ask for it. Myth 3. My payouts are locked in and don't really change. They actually shift all the time. They are indexed to inflation 4 times a year. The GIS recalculates every July. The clawback threshold moves annually, and your rates can change the moment your marital status shifts. A benefit you set up years ago absolutely deserves a fresh look today. Myth 4. If I call to ask questions, they will audit me or cut my check. Reaching out to verify your own information does not put you at risk. The people who see their benefits cut are usually the ones who failed to report a life change, not the ones calling to make sure everything is correct. Asking questions is how you protect yourself. Myth 5. It is too late for me to fix any of this. For a clawback in a tax year that is already closed, yes, that is finalized. But missed GIS can be back paid for up to 11 months. Forgotten credits can still be claimed, and an incorrect status can be updated moving forward. It is rarely as late as people fear, but waiting around will definitely shrink the amount of cash you can recover. Now let's look at exactly what you need to do, step by step. Get a pen ready, or save this video for later, because this is the exact part that puts money right back in your pocket. Step 1. File your tax return every single year without exception, even if your income is zero. This single task shields your GIS, recalculates your payouts properly, and triggers your senior tax credits. If you are behind, go ahead and file those missing years. If the cost or the confusion is holding you back, free help is available. The CRA operates the Community Volunteer Income Tax Program, offering free tax clinics for low-income seniors right across Canada. You can locate a clinic on the CRA website by searching for free tax clinics, or you can call the CRA directly at 1-800-959-8281 and request information on the Volunteer Tax Clinic program near you. There is never a valid reason to skip filing. Step 2. Create or verify your My Service Canada account. This online dashboard lets you view your OAS, GIS, and CPP all in one convenient place with your own eyes, rather than waiting for the system to tell you something went wrong, because it won't. Head over to canada.ca and search for My Service Canada account. If navigating the internet isn't your thing, sit down with a family member or a trusted friend to set it up together, and make sure to turn on the multi-step login security if it is available. That is your shield against the very scams we discussed. Step 3. If your income recently dropped, call and request a GIS income estimate. The official phone number for Old Age Security and GIS is 1-800-277-9914. Here is the exact sentence you should use. My income has decreased, and I would like to request that my GIS be reassessed based on my estimated current income. If you lost your spouse, if you recently retired, or if your earnings fell for any reason, they can evaluate you using your current estimated income instead of tax data that is 1 or 2 years old. Most people have no clue this path exists, yet it can mean getting hundreds of extra dollars a month starting right now, instead of waiting an entire year. Step 4. Manage your taxable income before December 31st to remain below the clawback limit. As a reminder, that boundary sits around $93,554 of net income. If your earnings are anywhere near that mark, speak with whoever prepares your taxes well before the year ends. Ask them about spreading out your RRSP withdrawals across different calendar years, timing your capital gains, or utilizing pension income splitting with your spouse to lower your net income. Once the calendar turns over, your window closes. All of your planning must happen before December 31st, so do not leave it until the final week of the year. Step 5. Shield yourself from fraud by remembering one simple rule. The CRA and Service Canada will never call you up demanding an immediate payment. They will never ask for gift cards. They will never request your social insurance number over the phone to verify an account, and they will never threaten you with police arrest. If you ever pick up a call like that, hang up immediately. If you want to be completely certain everything is fine, call the agency back yourself using the official, verified CRA number 1-800-959-8281. Never trust the phone number that just dialed you. And if you have already been targeted by a fraudster, report the incident immediately to the Canadian Anti-Fraud Centre at 1-888-495-8501. Those 5 steps tackle every single change we have gone over. Not a single one of them will cost you a penny to execute. Every one of them is built to defend your cash. If someone demands a fee to unlock or safeguard your benefits, they are running a scam. The real system is 100% free. Before we do a quick final recap, let me address the questions that drop into my inbox most often. My income is nowhere near that clawback line. Does change number 1 even matter to me? If your earnings are well under that $93,000 mark, you do not need to stress about the clawback. Focus your energy entirely on the GIS and your senior tax credits instead. The recovery tax mostly targets higher earners, but it is vital to know where the boundary sits, so a one-time withdrawal does not catch you off guard. My partner manages all of our finances. What steps should I take? Sit down as a team and handle steps 1 and 2 together. File both of your tax returns and make sure at least one of you sets up a My Service Canada account so you can see the complete picture. For married couples, both tax returns are crucial because the GIS is figured out using your combined household income. How will I even spot it if something goes wrong? Form a simple habit of comparing your monthly deposits and keep your eyes peeled every July when the new cycle begins. If your OAS suddenly drops, that is a telltale sign of a clawback. If your GIS vanishes entirely, check to make sure your taxes were successfully filed. A quick glance at your statements will catch most errors before they grow. Is requesting that GIS income estimate a massive headache? Not at all. It requires a single phone call and occasionally a short document. Just use the exact phrase I gave you in step 3, have your current financial figures ready, and the agent will guide you through the process. It is easily one of the most underutilized and valuable tools available. Do these senior tax credits actually amount to much? For a lot of retirees, absolutely, especially the medical expense deduction once you combine prescriptions, dental cleanings, glasses, hearing devices, and traveling for medical appointments across 12 months. The golden rule is hanging onto your receipts. A simple box filled with paperwork can be worth hundreds of dollars at tax time. I haven't filed my taxes in a couple of years. Is it too late, and will I face penalties? It is definitely not too late. For a low-income retiree who likely does not owe any back taxes, filing late is just a matter of catching up, not a punishment. The true danger is the cash you are forfeiting every month you wait, your GIS, and your credits. Submit those missing returns, reach out to a free community clinic if you need assistance, and you might even unlock retroactive payments you were owed. Keeping your head in the sand because you are anxious is the worst path to take. What happens if my OAS arrives as a physical check rather than direct deposit? The rule shifts and adjustments affect you in the exact same way. The only variation is that a physical check via mail might take a few extra days to land in your mailbox. Give it a little breathing room before assuming there is an issue. Most seniors eventually shift to direct deposit for convenience and safety, but that is entirely your call to make. Am I allowed to authorize my adult child to handle Service Canada on my behalf? Yes, you can complete a consent form so a trusted family member can speak to Service Canada for you, or you can simply have them sit next to you while you make the call. There is absolutely no shame in asking for assistance. The seniors who successfully collect every dollar they are owed are often the ones who lean on a trusted person to help navigate the call. Just make sure it is truly someone you trust blindly, as they will be looking at your sensitive personal information. If I only do one single thing today, what should it be? If you haven't filed your latest taxes, do that immediately. If you have, take 5 minutes to call and confirm your OAS and GIS figures are accurate. If you only walk away with one concept from this video, make it that one. Filing the return is the key, and making the phone call is the lock. Every other benefit builds on top of those two actions. I know that for many of you, the absolute toughest part of this process isn't grasping the rules, it is actually picking up the phone. Calling a government customer service line can feel incredibly intimidating. You might worry about rotting on hold for hours, stuttering over your words, or dealing with an impatient agent. Let me remove that anxiety entirely by walking you through exactly what one of these calls looks like from beginning to end, so you know exactly what to expect before you dial. You will dial 1-800-2-779-914 for OAS and GIS inquiries, or 1-800-959-8281 for tax-related questions. You will navigate an automated phone menu first. Listen for the option that closely aligns with your needs. And if you are confused, you can typically stay on the line or hit 0 to connect with a human being. Yes, you might have to wait, and sometimes it can be a long stretch, particularly in July when the new benefit amounts drop. My best piece of advice is to call early in the morning if possible, pop the phone on speaker, and relax comfortably while you wait. It is worth the time. When an agent connects, their very first priority will be proving you are who you say you are. They will request your social insurance number along with a handful of identifiers to confirm your identity, things like your date of birth and your current mailing address. This is entirely standard procedure, and it is designed to protect your file by ensuring they are communicating with the real you. Notice the critical distinction here. You initiating the call to an official government number and verifying your identity is completely safe and correct. A random stranger dialing your phone out of nowhere and demanding those exact same personal details is a scam. Identical data, completely opposite scenarios. One keeps you secure, the other is identity theft. Once the security check is clear, you are driving the conversation. You don't need to be a financial expert. You just ask your questions one by one and jot down the answers. Can you verify my current monthly OAS payout and confirm if the July adjustment was applied? Is my GIS currently active, and is it pulling from my most recent tax return? My income dropped recently. Can my GIS be adjusted based on my current estimated earnings? I am 75 or older. Am I receiving the higher OAS percentage for my age bracket? Ask whatever applies to your life, and do not feel guilty about it. Write down the agent's name and the date of your call. If they point out something that needs a fix, ask directly. What specific step do I need to take next, and how long will it take to reflect in my monthly check? Make sure you get a clear answer before saying goodbye. And if they use confusing jargon, it is perfectly fine, even incredibly smart, to say, "Could you explain that in simpler terms?" The folks who walk away with their finances sorted are the ones who keep asking questions until they completely understand. There is zero risk in auditing your own file. If everything is accurate, you gain absolute peace of mind. If there is an error, you just intercepted a quiet monthly leak and turned it into money returning to your pocket. You win either way simply by placing the call. Let's summarize everything so you have the core details in one place. Change 1. The OAS clawback. If your net income passes roughly $93,454, the government begins taking back your OAS at a rate of 15 cents on the dollar. The solution? Actively manage your taxable income before December 31st arrives. Change 2. The GIS recalculation. Your extra supplement resets every single July based on your tax return data. The solution: file your taxes every single year without fail, even with zero earnings, to keep your GIS from stopping. Change 3. The inflation bump. Your CPP and OAS will adjust upward, but almost always by less than your actual real-world bills. The solution: don't count on your government checks keeping pace with inflation. Budget with that shortfall in mind. Change 4. Stricter digital identity checks and the frauds mimicking them. The solution: set up your official My Service Canada account and never trust an unexpected incoming call claiming to be from the authorities. Report suspicious activity to 1-888-495-8501. Change 5. Senior-specific tax credits, the age amount, the pension credit, and especially the medical expense write-off. The solution: organize your receipts throughout the year and claim them yourself, because the CRA will not do it for you. And here is the underlying truth that connects every single point we have covered. None of the money you are rightfully owed is going to come looking for you. The clawback will track you down automatically. The system is exceptionally talented at taking its cut. But when it comes to the GIS, the deductions, and the adjustments in your favor, you have to stand up and claim them. The only obstacle sitting between you and that cash is knowing the rules exist and taking action. So take that step today. Take that step. As a quick disclaimer, this is general educational information meant to help you defend your own government benefits, not professional financial or legal advice. Payout amounts, tax brackets, and credits shift and adjust throughout the year. Always verify your unique financial situation and the latest official numbers directly with Service Canada at canada.ca or the CRA before making major moves. If this breakdown brought you value, please subscribe so you can be right here with us when the next set of adjustments drops. Because there is always a new update around the corner every single quarter. And do me one single favor before you click away from this video. Call or sit down with just one senior in your life, your spouse, the person next door, your sibling, or the friend down the street who is surviving on a fixed income, and walk them through these points. Especially step number 1, make absolutely sure they are filing their annual tax returns. That one simple chat could put hundreds of dollars right back into their wallet this year. Take great care of yourselves. Look out for one another, and I will catch you in the next video.